Hi, mining community. Welcome back to another episode of the Dig Deep, the Mining Podcast. And today we have a returning guest who appeared back in March 2021, which was episode 134. Brett Richards is the CEO and Director of Goldshore Resources, who are working on a major historical multi-million ounce gold opportunity in Ontario, Canada, and keen to know more about this exciting asset. Obviously, Brett has a wealth of experience and knowledge over 30 years working in the industry for the likes of Banro, Roxgold, Katanga Mining and Kinross. And his expertise lies in financing of mines, developing operations and M&A. So Brett is going to give us an update on Goldshore. And those that obviously haven't heard Brett speak before, obviously go back and revisit episode 134, which was done in March 2021. So Brett, how you doing?
I'm doing great, Rob. Thanks for having me on the show again.
No, and I appreciate your time again as well. So for those that don't know you, I just wanted you to give us a quick overview of your background and yourself, and I suppose also a snapshot of Goldshore Resources.
Yeah, absolutely. My background is quite simple. I've been in this business for a long time, over 35 years. I've run a number of listed companies. I've started a number of listed companies, both in Canada and the UK. I was the CEO of Avocet PLC on the main board in London, took it from $200 million market cap to a $1.2 billion market cap. And I was one of the founding shareholders and founders of Katanga Mining in the DRC. And for the past kind of 5 or 6 years, I've been working for private equity firms up until the point in time when this Goldshore opportunity came along. And I made the overture to run it. I was actually solicited as an investor for the project. And I said, I like this so much, I want to run it.
Got you. And I wondered if you just give us an overview of Goldshore.
Sure. So we acquired the Moss Lake project from Wesdome back in January of 21. We acquired it for $52 million, 12 and a half in cash and the balance in shares. And some of those shares are still to be paid out over milestones. And subsequent to that, I raised $25 million for the transaction and to support the development of the project. We were listed on June the 4th of 2021. And we started our very comprehensive exploration strategy. We started out with a very large geophysical VTEM survey over the entire property, and we commenced a 100,000 meter drill. And all last summer and fall, we were kind of getting kind of organized on the ground and getting our people in place, et cetera. And also in a very difficult time. I have to mention, COVID and supply chain and labor shortages were all quite on the forefront last year, but we managed to execute and get through it all. And now we raised another $10 million in last November, and we've just raised another $10 million in the past 2 weeks, closed on, I think it was April 16th. And that now secures us to get through our program for the lion's share of this year. We have about 80,000 meters left to do, but we're going to see kind of constant news flow from now until the end of the year.
Yeah, obviously we last spoke back in March 2021, so it's nearly 12, 13 months ago. Can you update on some of the activities that you've been involved in? Obviously, you just mentioned a couple of raises there. What else has been doing? And I suppose also, how has COVID affected you guys over the last year?
Yeah, I'll start with the COVID question. We had various incidents of COVID early on. We implemented a very strict COVID protocol and policy. Still abide by it today, even though some of the restrictions federally have been released in Canada. Policy. It's just, I think, good business going forward. But yeah, there were some slowdowns, and assay turnaround went from 2-3 weeks to 12 weeks and 13 weeks, and the delivery of certain consumables to our site took longer because there was labor shortages and people shortages. So all of those kind of compounding things of last year had an impact, but they didn't they didn't put a chink in our will. We continued to kind of carry on and move forward with with our program. But what have we done since our last discussion? Well, I think we have a couple of really key things. First of all, we not only got through the VTEM survey, but we got all the interpretation done on it, which is very meaningful. And you can go to our website and see the verify link to our 3D model. And it really illustrates what I've been saying from the very beginning. This deposit is much bigger, much wider, much longer, much deeper than what what is historically known from the historic kind of work that's been done. We have 4 million ounces of historical resource, and that in itself is probably economic enough at today's gold price to put in. Took the stance that we were going to drill this out to what we felt could be a tier 1 status, and a tier 1 status is 10 million ounces, a 10-year plus generational mine life, so 10 years and 10 years more, and lower half of the cost curve and a big production profile. And we felt that this property, the quality of this deposit, lended it this comprehensive amount of work to it to really realize some big value here. So that VTEM survey was done. It has now given us 29 brand new targets to, I'll say, test as well as verify, because there is some historic drilling done on all this in order to get us up to tier 1 status. And that's just at Moss Lake. We haven't really dealt with the size and potential that we see now at Coldstream and North Coldstream and Hamlin Lake. Again, very, very compelling. Different geology, different mineralization, but our focus is on Moss Lake, but we have this tremendous upside as well.
Yeah. And how long do you sort of envisage drilling going on for? And then what comes after the drilling?
So I expect we're going to get through our 80,000 remaining meters this year. We have decided to really crank it up. We're running four rigs right now. We went through some typical hiccups through the winter time, but we're going to ramp this up to 8 or 9 rigs very soon in the next few weeks, and we're going to run 9 rigs right out through till we're done our program. And we want to take advantage of certainly the warm weather in the summer and the fall. And dry weather, so that we can utilize that time as best as possible. When we get through our program, and the 100,000 meter number is just a number, it doesn't mean anything. There's no kind of engineered definition as to why we stopped at that, but we just felt that it was that level of quantum needed to be able to prove up the existing resource and to also expand the existing resource to something to tier 1 status. And I think we're still going to leave a whole bunch of upside on the table when we get there, but that was the purpose of doing it. So if we get through our program this year, we'll be looking at updating the PEA after a resource estimation update. But I think the resource update will come kind of January of next year, February of next year. And in parallel, we'll start a new PEA, and hopefully we're sitting here this time next year talking about the economic outputs from the PEA, from the new PEA. So that kind of captures the next 12 months. And beyond the next 12 months, there's a lot of, I'll say, there's a lot of permutations of what can happen. And I'd be, from all the way from us carrying on and doing more work and taking us all the way to feasibility study, all the way to partnering with somebody on some form of M&A transaction.
Yeah, and obviously you mentioned supply chains. Have those improved since last year? And obviously those timeframes, have they been reduced at all?
Yeah, no, they haven't. We saw maybe a bit of a pickup before Christmas, but I think after Christmas we've started to see kind of more of a slowdown, and it's all of the same things that affect a lot of our industry. As you've seen, fuel here in Canada has gone up from about $1.20 a liter up to $1.99, and diesel fuel being well over $2 a liter. That's an 80% increase and 90% increase in fuel prices here, and they're holding. And so there's that cost of transportation. That's one thing. The second thing is, because of this hyperinflationary environment we live in, it's also creating a bit of a labor shortage, and that labor shortage started with COVID. And the Canadian government decided that they would incentivize people financially to ride out the COVID storm. So there was a lot of, let's call it, free money given out. So when people were given free money, they decided not to work, and some of them got back into the workforce late last year. But we're still seeing kind of a shortage of skilled labor in Canada, and specifically in the mining business, because mining is so strong right now, and there's so many activities going on and so much drilling going on that it's very, very difficult to get skilled drillers. So yeah, I guess the answer to your question is the supply chain hasn't broken. It's still delayed. There's still lots of problems, and the cost of delivering goods has gone up substantially. But and I don't see where we're going to see any light at the end of the tunnel just yet. We're still in a hyperinflationary environment. Canada 6.5% for Q1 is what it looks like. US CPI is going to be higher. We're in for a bit of a hurt for some time here, and I think we just have to do what we can, mitigate the steps to make things work still, and take the necessary precautions. Plan for the worst and hope for the best.
Yeah, I'll certainly agree with you there. I see you have a strong advisory board, David Garofalo and Craig Parry, and wonder what specific value they add to the company.
Yeah, it's not just those, and I'd be amiss if I didn't name them all, so I won't name any of them. But we have a very, very strong board of CEOs in their own right, both men and women who are industry champions, and our advisory board are industry champions. And some of them will go into the Mining Hall of Fame in Canada. The rationale behind it is quite simple, and it's quite selfish. Is when I decided that I was going to kind of come and take on this challenge and this role, because I saw the opportunity. I made it very clear to everybody, and these are all colleagues of mine. I made it very clear that, guys, I've been out of the capital market space in Vancouver, and to a lesser degree Toronto, for about 5 or 6 years. So I need to, because I've been working for private equity in London on projects in Africa, and I just haven't needed to be able to interface at those levels. So I need everyone's network. I need their contacts. I need their ability to reach out to multiple eyes and get lots of eyes on this story. My view is liquidity comes from people. People come from their contacts, and if you make the base of the pyramid as wide as possible, for every 100 eyes we get on the story, 5 of them are going to go to our website, and for every 100 that go to our website, 5 of them are going to call their broker, and for every 500 of them that call their broker, maybe 50 of them are going to buy our stock. So I need to make the base of the platform as wide as possible. So I have all of these ambassadors, all of these people on the advisory board, and let's who act as ambassadors and who can get the story out there and help me get the story out there. But let's face it, if we're ever faced with the scenario where we have to build this mine, and I've built 3 mines in my career. Pete Flindell and I have been together now for almost 20 years. We have built mines together. This is what we do, and we're very good at it. We've been very successful at it in our careers. But one man doesn't make a great company, and you need a leader for great companies. But what it takes at the end of the day are great teams of people. And everybody on our advisory board has either started, run, or built, single operation or multiple operation mining companies. A lot of guys on our board have also gone through the ranks of those stages as well. So I actually have a very, very experienced team to build Moss Lake if we ever had to. And yes, I'd have to put together, more of a corporate team and more of a project team and more of an operating team. And I've done all that before. So we can do it. If there's an opportunity to crystallize the value that we create for our shareholders in some sort of liquidity event, that may well be first prize. But let's see in a year from now. Let's see where this takes us, and at that point in time, we'll have a better understanding of what the future holds after this time next year.
Yeah, certainly. The reasons why I mentioned David and Craig is because I both interviewed both of them for the podcast, so that's the reason why. Why has your share price been trading so low throughout throughout a very bumpy start to 2022?
It's a great question, and I wish I had the silver bullet answer for it, but there isn't a silver bullet answer. Last year, when I started getting out to the conferences, I was in Denver, for the gold show, because they were full, and in actual fact they weren't full. But I got to Denver, and it was like a ghost town. It was like I got the date wrong. There was nobody there, and I thought, this is a waste of time, and quite frankly, it was a waste of money. But we had to get the story out there, and then and all affected mostly by COVID. And as we kind of went through the conference season, they became more and more well attended. And then we started to get some traction in the gold price, and we started to get a little bit of traction in our share price. But let's face it, last year, people were doing 20% in asset classes that were not gold or were not mining. They were doing plus 20% and quite happy with the return on their investment. Gold was flat last year. Maybe in Canadian dollars, it was down a couple of points, but in US dollars, it was flat. And gold equities were down 20%. So why am I going to move money out of a raging asset class that's doing 20% into an asset class that's down 20%? There's some logic as to why, but the macro has to now come clean. And the macro came clear in January when we wake up and we heard about the inflation of Q3, Q4, and we started to see some traction in the gold price, because in 2021, it would go up and then it would pull back. It would go up and it would pull back. It was just range bound, and it wouldn't break out. And it did once and came right back down to kind of 1800 into the 1700s. So I think now we started to feel that macro environment where gold is now going to have some really strong traction between 1800 and 2200. And in January, the market started to wake up, and you started to feel like, okay, there's going to be a rotation of capital come out of those asset classes that did very well last year. And they're going to come to the flight to safety. They're going to come as a hedge to that inflation, because their cost of goods, their transportation costs, everything that's related to why they did so well last year when inflation was low is now going to be compounded when inflation's high. So they'll probably lose 20% this year, when precious metals is probably going to do 20% this year, and hopefully gold equities does even more. So you started to feel this paradigm shift in January, and then bang, February hit, and it was risk off. The Ukraine and the Russia crisis started to occur. And although it kept the gold price strong, and global instability and global uncertainty keeps the gold price strong, it took the investment community right risk off. It just took, everyone went risk off. So then we started to see very little liquidity, and it was very difficult for a couple of months' time. I think now a lot of gold equities traded down as we did. But I think now what we're seeing is even though there's some risk coming back on, even though the global geopolitical situation in the world is not great, we're starting to see that there's going to be an end to it, however long it's going to take. But I think maybe there's some visibility down the road that we've either been numbed by the situation to the point where investors are coming back. That may well be true. But the reality is we're starting to see some pickups in the capital markets. And we had a great day yesterday. We were up 25%, but the base that we started at was the lowest share price we've had in our history. And we're still trading under IPO. So the performance of Goldshore has been absolutely horrible. Yes, I accrete that mostly to the capital market space and the dynamics and the macro and how they affect juniors. But, I also have to take some of this personally, and I have to say, what am I doing and what am I not doing that could be getting more eyes on the story? So we've actually had to change gears on our IR and we've had to change gears on our marketing and our advertising multiple times, and until the point in time when that formula, that silver bullet that we've all been looking for, is working. And I think we're starting to get that right now. We're getting the demographic in the US looking at our stock. We're getting a big demographic in Europe and the UK looking at our stock. And we're getting we've washed out a lot of the, I'll say, the looser stock when we traded down to 45 cents. And, I think we're on the way up to our potential now.
Yeah, obviously following on, talking about obviously the gold price, it has reached 2000, I think last week sometime. How do you see the gold price moving throughout the rest of this year?
Yeah, and I've been very consistent about this, and for the first time in 35 years, I've probably got it right. I actually thought gold price was going to run a little bit stronger last year, but I said we're going to be range bound between 1800 and 2200. There will be spikes above it, and there will be pullbacks slightly lower than 1800, but I think it's the new floor. I just don't think we're going to see $1,500 gold anymore, and there's reasons for that. It's a $30 trillion debt of the US government. It's the $3 trillion budget deficit they run. It is the quantitative easing and the ability to print more money to get themselves out of situations, and their monetary policy associated with all that. It's very, very low interest rates for the past 10 years. And we've created this hyperinflation now, where we've had the highest inflation for 40 years. And it's very, very, very problematic. I just don't see gold going back to the levels that we saw it pull back to before. Keep in mind, in 81 to 89, gold went from like $30 to kind of $600. And in 2001 to 2011, it went from $240, $250, all the way up to 1920. And yeah, then it pulled back, and we pulled all the way back to $1,100. But so you have these big 10-year run-ups, and then you have a pullback, and you have these big 10-year run-ups, and you have a bit of a pullback, and they're aligned with the economic cycle of the world, mostly the U.S. But there is some alignment to them. We seem to be stretching them out a bit further, but I think where we are now, from a gold price scenario, is we're not going to be going back. We're not going to see this big pullback by 50%. We're at 1800, we're at 1960, 1950, 1940 today. We're going to stay around this area for some time to come. And yeah, we may see events that take it above 2200, but this is kind of what feels right. Doesn't feel too heavy. It feels like the right price range for gold to be trading at. So that's my view, and I think that's probably my 5-year view. I just don't see where there's going to be many situations that are going to make it run. I'm not a $3,000 gold guy. I know David is. I'm not a $3,000 gold guy. Maybe the odd spike in the next 10 years, but I just don't see it sustaining at those levels. And I understand the reasons why a lot of the gold bulls think it should stay at $3,000. I just think that there's a lot of other kind of global factors that gold at $3,000 destabilizes a lot of African countries in a very, very big way. And I just don't think we'll see that.
Yeah. And obviously a rising gold price is a result of a failing currency, which is why you're probably suggesting that that's happening, because obviously the currency is being printed into oblivion, it seems. So hence the reason why the gold price should start rising and not pull back to the levels that you mentioned.
Yeah, that's right.
What would you say to investors looking to buy some sort of gold juniors, and I suppose your reasons for investing in Goldshore Resources?
Yeah, I think I take a bit of an agnostic, even though I'm biased. I take a bit of an agnostic view on this, and I'll ask an investor, why do you want to buy gold? And if they tell me they want to buy gold as safety, as security, as some sort of hedge against inflation, as some sort of hedge against geopolitical uncertainty and instability, I think that's a good answer. And historically, that's been the right answer. And it's why I would say, well, why would you buy crypto? Would you buy other asset classes, as a flight to safety? And if the answer is no, then again, historically, that's been the right answer. So, and then I go on, well, why do you want to buy gold equities? And the whole reason is gold equities historically have traded at multiples higher than the actual gold price. So you get a premium to a gold equity based on growth, based on reserve growth, based on production growth. So we historically used to get a 1.4, 1.6, 1.8 premium on trading multiples. If we were trading on 5 times earnings or 7 times earnings, we would get an actual big multiple to that. And that hasn't happened for some time. It may happen in the next cycle, but that's why you want to hold gold equities, because there's a bit of leverage to actually holding gold physical. If you want to hold gold physical, buy an ETF. And although they're not asset backed, they're paper backed. And for every dollar they have out there, they don't have a hold a dollar in storage of gold in storage. But you want to play gold, play an ETF. But if you want leverage, you're going to play a gold equity. Now, you want real leverage, you're going to play Goldshore, because we have 4 million ounces on the path to 10, and I can show you well beyond 10. And this is going to be a project that is going to be built. This is going to be a project that'll be built by me and my team, or it'll be built by the Barricks, the Newmonts, the Newcrests, the Agnicos, the IAMGolds, the Kinrosses of the world. And there's 20 or 30 of those companies have the capacity to do this, because they need reserve depletion. They need to restock. They need production growth. They need earnings growth. And a lot of them are going through some very challenging times. Barrick is having difficulty replacing reserves. Kinross have just lost their Russian business, and they're going to sell Chirano. And so they may reevaluate their geography and where they're located. So they may have production gaps. And although they've bought Great Bear, but that's 10 years away from production, or 8 years away. Everybody has their own little pipeline, and you need to constantly keep filling that pipeline so you can grow the business. So you get that 1.4, 1.5 times earnings multiple. And so there's lots of companies that are lacking it. So yeah, why gold? Why gold equities? And why Goldshore? Because we have the ultimate leverage to the answers to those questions. We're trading at 1/5 our current economics. We're trading at $49-50 million market cap today. And companies like ours trade at 0.3 times NPV. And at $1,800 gold, that's a $220 million market cap company. We're 50. And so that's 1/4 of where we should be, 1/5 where we should be trading. That's our starting point. We add this to a tier 1 status, and we're talking about a $2 to $3 billion post-tax NPV. That's a $600 to $900 million company. And we're at $50 million today. So you want earnings potential personally, then you look for leverage, and you look for size, scale, growth, and execution. So you start ticking boxes about, do we have the people to do this? I think we do. And I think we have the leadership to do it. And I think Pete is a tremendous leader on the ground. Do we have the geology to do it? And we have a proven 20-kilometer mineralized trend. We can show it on our website graphically in our Verify 3D website. And do we have the ability to demonstrate that and prove that? Well, we're fully cashed up. We've got 20,000 meters into our 100,000 meter program. So this is for us about execution. We have mitigated the geological risk, the metallurgical risk, the ESG risk, other technical risks. We have mitigated all that because we address them right up front. We're very frank about it. And if we address them, then we solve them. And if we solve them, then they don't become a risk anymore. But you always have to execute, and execution risk is going to be what we have to deliver on. And if we deliver on that, I think everything else will fall into place in one shape or form. I can say what our goal is. I can say what our target is. I may overshoot it, but I know one thing: I'm certainly not setting myself up for failure, and I'm going to undercook it. So I'm very conservative in the approach we take, and even that is still very, very big leverage to kind of where we're trading today.
Yeah. Couple more questions. What's the outlook for the rest of the year for yourself and Goldshore?
Yeah, so this is just more of the same. I know it's boring, but we're going to put out drill results every 3 or 4 weeks. They're going to be boring. They're going to be 1 gram, 1.2, 1.4 grams over 100 meters. It's going to be more of the same. And boring is good, because boring is going to validate what I'm saying, is that we have a large disseminated deposit that's a kilometer wide and 6, 7 kilometers long, with 6, 7, 20, 6, 7, 8 kilometers of potential beyond that. We're not going to get to that. We're trying to build as big a resource that I can put a pit shell on, that I can put a PEA together on as possible. And that is going to demonstrate the bulk of the project. You always have to leave some upside on the table. We can't get through everything, but I'm trying to demonstrate with as little money as possible in as short a time as possible how big the size and potential of this is. So this year is going to be a lot of the same consistent drill results, and I think along the way we'll see maybe some surprises. Maybe how the business grows. We're going to see. I'm always out looking for things. I'm always out looking for opportunity. I'm an entrepreneur by nature, so I like to look. I don't turn my ears on anything, even if it's the worst project in the world. I probably run through 20 or 30 a week, and I'm always looking at things, and my team's always looking at things. So yeah, I think you're going to see delivery and execution this year, and leading up to our study work that'll start at the end of the year.
Yeah. And lastly, have you got any last or final thoughts for our audience?
Yeah, I've had a couple of conversations over the last week with people, and I think the sentiment is starting to change now in regards to investing in gold and investing in gold equities. It was very difficult last year. There's no two ways about it. But I think people are starting to see this aircraft carrier starting to turn, and it's starting to turn in a direction that reminds me of 2001, 2002, 2003 all over again. The cost of living is going up, and it's not transitory. It's not going away. Yeah, there'll be some short-term band-aids to fix fuel prices, like the US has brought in a bunch of reserve oil. The short-term fixes are not long-term solutions, and the general kind of cost of living has gone up, and it's really going to impair companies' earnings. And I think we are living in a time of in the capital markets where it's not a bubble in certain sectors. To me, and I've heard this, I'm quoting this, so I'm not coming up with this, I'm coining this. This is an everything bubble. Everything is trading way above where it should, except mining, except gold mining. And I don't say that, selectively. I say that because it's true. I think there is a big day of reckoning coming in the capital markets, and I just don't think this is sustainable of what we're seeing. And let's face it, the U.S. started this in 2016. This all started with polarization of the media, polarization of partisan politics, and this artificial created market that things are good and things are not that good, and things are getting worse. And the pandemic was bad. Let's respect it and let's move forward. But it wasn't a nothing burger. It was a something burger. It really hurt and killed a lot of people, and probably should have been handled much differently globally, but it wasn't. And let's learn from that and let's carry on. But I am very cautious in my investments right now. I'm very cautious because I really do think there is a day of reckoning coming. And yes, a quarter to a third of my portfolio sits in gold right now, and I'm way overweighted, but I believe in this thesis, and I certainly don't want to be exposed to a Black Thursday or a Black Monday or a Black Friday or whatever that day is going to come. And it's not a matter of if, I think it's a matter of when. And just like I think there will be a day of reckoning for gold equities, and it's not a matter of if. And yeah, so I see that no better time to get into Goldshore than now. Our share price has never been lower. Our opportunity has never been higher, and our probability of delivery has never been higher. So all of those boxes are ticked, and we are positioning for a trajectory on the up.
Yeah, certainly. Brett, really appreciate your time. And yeah, I can see you're passionate about Goldshore, and obviously, especially the gold market as well. And I agree with virtually everything you've said there. Gold has sort of been, or the precious metals has been undervalued, and is an undervalued asset to other classes. So if it is undervalued, where does it go next? It goes to fair value, then overvalue. So yeah, I agree with everything you said there. If our audience wants to reach out to you, if they want to know more information about Goldshore, how can they go about doing that? Are you across any social media platforms?
I am. And first of all, thank you. And I welcome people to reach out to me, because I want as many eyes on the story as possible. And if it means I have to do them 2 eyes at a time, I will. But I can be reached at info@goldshoreresources.com. That comes directly to me, and I'll directly answer what you're looking for. If you want 15, 20, 30 minutes with me on Zoom, have those conversations and share my view and share the update of the project. I am on Twitter, I am on Facebook, and I am on LinkedIn. And if you go to our website, goldshoreresources.com, you'll see all of the links to all of those social media platforms in there. And yeah, we are going to be starting a YouTube channel fairly soon. Again, when I talked earlier about trying to get more eyes on the story and changing the way we do it, this is the new way, and that's why we're talking, Rob.
Yeah, certainly. How do you feel doing all of this new kind of stuff? Is it pretty new to you, like a lot of this social media stuff and YouTube?
And well, I think I'm the only one in my family. I don't have a Facebook account. I don't have a Twitter account. I don't have an Instagram account. I had LinkedIn from a long time ago, only because I was bored one day and I signed up for it. But we used to do road shows where I would go to London, New York, Toronto, San Francisco, Texas, and we'd see 80-90% of our shareholder base in 2 weeks. Now 90% of my shareholders are retail, and they're scattered all over the world. And how do you have that same impact? The only way you can, I've been resistant. Hey, I'm 57 years old. I've been very resistant to being a part of it. So I guys my age do. They hire a kid who's 23 who knows this stuff inside and out. I produce the content. He just types it out and sends it off. But it's coming from me. But it's really content that I have to use somebody for, because quite frankly, in this day and age, I don't have the time to spend on any of that. But it's necessary and it's needed, because you got to get those eyes on.
Yeah, certainly. And any of those people that are listening that are maybe an older generation, Brett's obviously demonstrating that that's potentially what's needed if you want more exposure to your mining project or your mining company, or anything where you want more exposure and more people to know about your story, what you're doing. It is social media at the moment to get that message across. Hence the reason why I do this podcast. Hence the reason why I put this onto YouTube as well. So no, I appreciate you being up front there and doing it, and sort of good luck with that. And if you need any help, obviously feel free to reach out to me.
For sure. Thanks, Rob.
And those that are listening, I hope you enjoyed that episode. Please look at Goldshore's website, and obviously there's all the links. I'll put all the links in the show notes, accompanies podcast as well. So yeah, feel free to reach out to Brett. He's even offering his time if you have any questions, and you can have a chat with him. So I appreciate if you can take up the opportunity for those that are interested in Goldshore, the gold market, because I'm sure Brett's got a wealth of information, and I'm sure he can point you in the right direction and give you some valuable information. So appreciate sharing this episode to others around the world, whether you're in Canada, UK, Australia, anywhere, Africa, Please keep sharing this content. It is useful and it's educating the mining industry. So until next time, happy mining.